All right, morning everyone. Welcome back to Morning Cup by 8. Happy Tuesday, Aiman here. Right, so looking at the S&P 500 index, well, it rallied over almost 1.5% to 2% on Monday's session, as investors grew optimistic that the deal to end the US government shutdown is coming, removing major source of economic uncertainty. So I would say this risk on sentiment triggered a sharp rebound in tech sector with AI related stocks like uh, the Nvidia, Plantation surging after being sold off last week. So the rally was led by companies that benefit most from the functioning government and a stable economy as investors await for the restart of the economic data releases, right? So clearly now, if you look at the chart, well, it rebounded and break past above these 6,800 after forming a support at 6,700 points level. So if the sentiment remains clear and positive on the upcoming session, right? We might see that the index to travel higher towards the 6,950 points level, right? So looking at the US trading stocks that we have published yesterday. So we published RDDT, which is the website, social media company. So the stock is on its pending breakout formation, eyeing for the 200 dollar level. So uh, we can now expect the level and to travel to the 230 dollar level on a strong momentum, followed by the next resistance at 260 dollar level. Now if the counter reverse, do watch out for 170 dollar level for the immediate support. Also next we have Datadog, which is the DDG. Well, looking at the charts now, the counter uh, is on its higher high market structure, following the gap up and reaching higher above the $185 level and eyeing for the immediate resistance at $200 level. Where if the stock to climb up higher, right, we might see that it might travel higher towards the 220, which is the last resistance here. Uh, yeah, so now if the stock slide below the 170 level, this might signals a shift to a bearish structure, right? So as for the China A50 index futures, well, it closed, I would say, nearly flat yesterday, right? But this was due to a major sector rotation. Well, investors currently sold tech stocks and bought the consumer staples, right? So I think the key driver, uh, the new key driver was October inflation, which is the CPI data released over the weekend recently, which came in positive for the first time since June, right? Easing the I would say the inflationary fears. So uh, I mean, charts looking good right now. Trend still intact. So now the index futures is eyeing for the 15,500 points to breach over, and if the index went up on a strong momentum, we can target the next resistance at 16,000 uh 16,000 level, right? So for the WTI crude oil price futures, so it rose on Monday session, supported by the risk on mode as investors again optimistic that the deal to end the US government shutdown is near, right? Got close, um, which would be positive for the economic activity and also fuel demand, right? However, I think gains were kept by the persistent market concern over long-term, uh, um, I would say, global supply concern, right? So if you remember recently, which I mean, the Saudi Arabia recently cut the prices for Asia. Also, so for time being, I mean, for now we keep our short position remains intact, expecting a formation of a lower low market structure towards the $57 level, followed by $55 dollar level support, right? So coming back to our local market, Malaysia, well, I think the FKLI rallied at closing yesterday, supported by the strong investor confidence in the domestic economy, and also uh, note that our MYR, our ringgit, which hit a new high. Okay. So I think this optimism led to broad buying across heavyweight sectors as well. These financials, consumer, which also led by FNN, almost over, I mean, over 4.2% yesterday. The uh, tech as well, the tech stocks leading against as well, right? So yeah, the positive local sentiment was also supported by better mood across Asia, um, as investors hope for the resolution of the US shutdown, right? So now, looking at the chart, we keep our positive stance, expecting for the index to breach above this immediate resistance at 1635 points in the coming sessions ahead. While we see the stop loss remain steady at 1535 point level. Now, if the index uh, break out above this 1635, this level, right, we saw second resistance form at 1675 point level, right? So yesterday, like what I mentioned just now, tech went up over 2% day-to-day performance, right? Rebounding steadily from the previous week. Tech are now in focus, as I think some of the analysts in town recently upgraded sector uh, as a whole now, right? So in terms of our uh, watch list, we remain the telco names. Yeah, we remain telco names like Maxis and also the um, CDB, right? The four big operator names. If I'm not mistaken, well, underwent a positive price action yesterday. So also what I mentioned just now, we have the tech names that can be monitored as well, right? So okay. So moving on to our trading stocks. Today we have press metal, right? So the stock break out above 6 ringgit and 35 cent level on a strong volume. So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 6 ringgit and 65, followed by 6 ringgit and 85 level. So if the stock clear below the 6 ringgit and 15 cent support, this could dampen our uh, positive positive view, right? Also next we have VS Tech. So the stock is experiencing a pending breakout above, I mean, towards the 4.25 cent level. So if the stock remain bullish, we're expecting the price to reach the 4.50, followed by 4.75 cent for the second resistance. Also keep an eye at the 4 ringgit level for any attempt of reversal. So we have one breakout stocks for press metal, aluminium, and also one pending for the VS tax. Okay, and lastly, we got FCPO. Well, the commodity traded sideways yesterday as the market, I think, digested the new MBOB data, which was, I would say, a bit neutral, right? Showing domestic demand stockpiles in October. So the report also confirmed that the production surged to a high, right? And the October export was strong. Um, I mean, I think the market is now weighed down by the massive supply overhang and a new sign of slowing demand, right? So yeah, we still hold our short position unchanged, unless it trended up and cross above this 4,400 ringgit level, right? So yeah, I'll stop here and pass the floor to Aidil. Thanks everyone and happy trading.
Hi, yep. Morning. Thank you, Aiman. So, today we have a plantation sector update with a preview and also a monthly stats. So, for the preview, we expect Q on Q earnings to grow, and this is on the back of higher CPO prices and as well as output. So, CPO and PK prices rose 5% and 2% Q on Q for Malaysian planters, while FFB output improved 13% Q on Q as some planters experienced peak output in the month of August and September. So year on year wise, we should also be looking for better earnings on the back of higher CPO prices, even though FFB output were flattish year on year. So overall, we expect five companies to record largely inline earnings and four to likely come in below, which are JPG, SOP, Taan, and also TSH. Even though we note that JPG and Taan have been securing more external FFB to offset their moderating output. So their earnings may be coming in line this time around. And then we note that SD has also posted its results, which came in above expectations on the back of the contribution from its industrial development of 380 million ringgit. So just a quick one on the stats. October production reached 2 million tons for the first time in this year, and this is up 11% month-on-month and 14% year-on-year. So this brings the year-to-date October growth to plus 2% year-on-year. Moving forward, we will expect production to somewhat moderate as we believe October is to be the peak output for this year. And so we should see output to moderate over the next couple months. Then exports were also up 19% month-on-month, and this was likely driven by the Deepavali festive season, despite narrower discounts of CPO versus other oils. However, moving forward, we expect CPO discounts to be to widen versus other oils, as China has agreed to buy 12 million tons of soybean from America for the last 2 months of 2025, and also at least 25 million tons per annum for the next 3 years. And so this led to SBO prices rising 3% in one day. So as such, CPO is now trading at a larger discount to soybean oil of $104 per ton, versus $60 to $70 in the month of September and October. Yeah. So overall, PO stocks rose 4% month-on-month to 2.46 million tons, way above the 2 million ton mark, and the stock usage ratio is also above the historical average of 10% at about 12 to 14%. Yep. So, however, we still maintain neutral on the sector as we believe the recent share price rally has already as we believe that the elevated CPO prices have already been reflected in the recent share price rally of the KL Plantation Index. So we maintain our CPO price assumption at 4,350 ringgit per ton, and year-to-date average prices is about 4,353 per ton. Yep. So I'll stop here and I'll pass on to the next speaker. Thank you.
Hello. Hi. So, uh, okay. Hello. Hi. So, Sunway REIT's results came in yesterday. So, the 9 months result came in at above expectations, driven by strong performance from retail and industrial segments, both existing and newly acquired assets. We continue to like the REIT for its strong retail dominance, a diversified asset base, and disciplined asset recycling strategy. Starting with revenue, 9-month revenue rose 22% year-on-year, driven mainly by full period contribution from assets acquired in 2024, including Sunway 163 Mall, Keluang Mall, Aeon Seri Manjung, 6 giant hypermarkets, and Sunway Industrial Prime. The existing malls such as Sunway Pyramid and Sunway Carnival Mall also saw double-digit year-on-year growth. Core profit was up 31% year-on-year to 300 million, meeting 82% of our FY25 forecast and 84% of consensus estimates. The improvement was largely due to higher NPI on top of a relatively stable expense base and the realized net gain from the disposal of Sunway University for a net gain of 21 million. No interim DPU was declared given the consistent REIT strategy to give out the payout semi-annually. Gearing stood at 41% with majority of borrowings on fixed rate and average cost of debt easing to 3.8% from 3.9%. Occupancy remains stable across most assets with a slight decline in office segment, currently 81% occupancy following a non-renewal of a tenant at Wisma Sunway. The REIT retains over 900 million debt headroom based on a 50% gearing limit, leaving ample room for inorganic growth such as new acquisitions, asset enhancements, and such. Looking ahead, management expects stronger fourth quarter earnings underpinned by festive spending, which leads to higher variable rent collection and a seasonal pickup in hotel occupancy. Despite the SST pass-through, rental reversions are guided at high single-digit levels for FY25. The ongoing disposal of Sunway Hotel Seberang Jaya for 60 million, which is expected to complete by fourth quarter 2027, will enhance capital efficiency with minimal income disruptions if they will continue to collect rental until the new Sunway Carnival Hotel opens. Post results, we raised FY25 to FY27 earnings by 6 to 7% and maintained our buy call with a new TP of 2.45, implying a 15% upside and a 6% FY26 yield. So I will stop here. Thank you everyone and have a great week.